Are you feeling the magnetic pull of a shiny new credit card, tempted by the lure of air miles, cashback rewards, and tantalizing sign-up bonuses? Hold that thought. Don't reach for that application just yet. Whether you're a credit card rookie or a savvy swiper, there's a world beneath the surface that requires your careful navigation. Welcome to this comprehensive guide on what you need to consider before signing up for a new credit card. What's up, winners? My name is Nam. If you're new here, welcome. Here we talk all things personal finance and credit. Start out by subscribing so you don't miss out on any future videos. See, credit cards are like a double-edged sword. They give you a lot of perks, but if you're not careful, they just might backfire. That's why we're here today, so to show you what's really going on behind the glossy advertisements and fine print. This video will go through all of the things that you should consider prior to applying. So let's jump right into our first major point. Your credit score. Many people apply for credit cards without fully grasping the potential impact on the credit score or giving it any prior thought. In most instances, every time that you apply for a credit card, the issue performs a hard inquiry or a hard pull on your credit report. Sounds harsh, doesn't it? Well, it kind of is. This hard inquiry is lenders examining your credit worthiness, which leads to a slight dip in your credit score. But that's not all. This dip, however small, could affect your odds of approval for other types of lending like loans or mortgages. So if you're planning to buy a house or a car soon, you might want to postpone that new credit card application. Hard inquiries usually impact your credit score the most during the first 12 months, but they should fall off after 24 months. You likely see a slight dip to your credit score within the first few months, so unless your credit score is well above 740, every point counts. Now, if your credit score is a 780 and you have a hard inquiry, a 5 to 10 point drop won't affect your chances of securing a loan since you're already eligible for the best rates based on your credit score. Hard inquiries are just one concern when applying for a new credit card. There's also the factor of reducing your average age of accounts. This will impact your length of credit history, which accounts for 15% of your credit score. The longer average age of accounts is better for your score, whereas a younger average age is worse. While applying for a new credit card every few months can lower your credit score, I routinely do this and still maintain a score in the high 700s to the low 800s. However, some banks and lenders may automatically reject your application if your accounts are too new. It can give the impression that you're desperate for credit. So far, everything we discussed pertains to personal credit cards. However, business credit cards operate under a different set of rules. Similar to personal credit cards, applying for a business credit card requires a hard inquiry or a personal guarantee. This means that if you default on your payments, this will impact your personal credit score. The silver lining with business credit cards is that they are designed specifically for business use. So if you maintain balances on these cards, it won't affect your personal credit utilization. Also, business credit cards usually don't show up on your personal credit report unless you default or the card is issued by a provider that reports to the personal credit bureaus. So we're talking about things to do before getting a credit card, right? One of those things I personally find really helpful is the option to see if you pre-qualify. It gives you a chance to see if you're a good match without affecting your credit score. The next important consideration is being aware of the 524 rule. It is an unwritten rule that some banks follow. You might be wondering, what on earth is that? Well, you're not alone, and once you understand it, you can significantly influence your credit card strategy. Here's the lowdown. The Chase 524 rule is an unwritten rule that applies to Chase credit cards. It is rumored that if you open 5 or more credit cards in the last 24 months with any issuer, just not with Chase, they will most likely reject your application. That's correct. Regardless of how gleaming your credit score may be, you might find yourself facing a rejection. So why do they enforce this rule? They aim to discourage customers from card hopping just to accumulate sign-up bonuses. Chase offers some of the most rewarding cards on the market, and they want to preserve these benefits for customers who are in it for the long haul, rather than those who like to hack their points. Here it gets a little intricate. Not every credit account contributes to the 524 rule. Business credit cards, especially those who don't report to your personal credit, are usually excluded. However, if you plan to apply for a Chase business credit card, then the 524 rule does apply. But once approved, that business credit card does not count against your 5-card limit. You might ask, why would you even care about the Chase 524 rule? Well, Chase offers around 30 or more credit cards. If the Chase 524 rule is an obstacle, it restricts your access to a variety of credit cards Chase has available. If Chase credit cards aren't on your radar, then by all means, apply for the credit card that you desire. However, bear in mind that many credit card issuers have their own rules that could disqualify you. That's why it is crucial to consider whether or not you're over 524 or under, and if it's worth using up a slot. In essence, if you open up 3 credit cards within the past 24 months and you are considering a non-Chase credit card, is that card worth filling a slot that could have been used for a Chase credit card? I personally like Chase credit cards because of the usability of Chase Ultimate Reward Points. On a topic of sign-up bonuses or welcome offers, another key aspect to discuss is the ability to meet minimum spending requirements to earn those bonuses. Sign-up offers usually occur once every 24 to 48 months, or in some cases, once in the account's lifetime. If you can't meet that minimum spending requirement to unlock the sign-up bonus, you miss out on the chance to earn a heap of points or cash back. Earning points or cash back through a sign-up bonus is typically the fastest way to accumulate a significant amount of benefits. For example, the Amex Gold Card offered 90,000 membership reward points for spending $4,000 over the first 6 months. To earn those same 90,000 membership reward points through spending alone, you need to spend at least $36,000. Therefore, spending $4,000 in 6 months is a more sensible route than spending $36,000 to achieve the same reward. If you're interested in earning points and miles quickly, sign-up bonuses are the fastest way to amass a large balance for your future trips. Even if you're not an avid traveler, the same principle applies to cash bonuses. One of my preferred strategies to meet minimum spending requirements is by paying rent with your credit card. Not all credit cards are eligible, so typically these are just Visa and MasterCards, so leaving American Express card holders out of luck. Another tactic includes opening up checking accounts, some of which allow deposits via your credit card or purchasing Amazon gift cards. Since you will likely use this balance eventually, you're essentially just delaying your purchase. One critical note when meeting minimum spends is to avoid going into debt just to reach the minimum spending requirement. The interest charges would negate the benefits of earning all of those points. This brings us to our next crucial consideration, which is opportunity cost. In essence, opportunity cost is the value of what you're giving up by choosing one option over another. When you decide over one credit card over others available, you're choosing one set of benefits and leaving others behind. This links back to the Chase 524 rule. If you choose a card that fills up your 5th slot, you'll be unable to apply for another Chase credit card for 2 years from the oldest card, and that's something that you must be prepared for. When I'm looking for a new credit card, I tend to go for ones that offer historically high sign-up bonuses. This is not to say that I only apply for cards with sign-up bonuses, but you have to be thoughtful of the benefits to get from the card to make it worth it. If you are considering getting credit cards for sign-up bonuses, you should draw up a pros and cons list. For example, if you are required to spend $4,000 in 3 months, could that money be better spent on another card delivering a higher return? One of the biggest factors in opportunity cost relates to applying for American Express cards. These cards offer a one-time bonus, so I generally recommend applying for an American Express card only when it has a historically high offer. Since MX bonuses can only be claimed once, it is important to ensure that you secure the best deal possible. On the other hand, with credit cards from issuers like Chase, Capital One, or Bank of America, you can often close that card and reapply for a sign-up bonus within 2 to 4 years. Always consider these factors when choosing one card over the other. Now let's discuss annual fees. No one enjoys paying annual fees, but there are times when they can deliver great returns. The most value is usually derived in the first year of opening the card. Take the American Express Platinum card as an example. This card comes with a hefty $695 annual fee, but offers a welcome bonus of 125,000 membership reward points. Depending on how you redeem your points, this can equate to a value between $1,200 to over $10,000. Even if you value this on the lower end, you still achieve a positive return on your investment. Additionally, this card offers various credits, including a hotel credit, digital entertainment credit, Uber credit, lounge access, and more. Think of these credits as a coupon book. If you don't use them, you lose them. In a way, you're prepaying for these benefits with your annual fee. If you typically use these credits without the Platinum card, then the annual fee may be worth it. But if you're not a regular user of these services, you're essentially just being forced to use them to extract value. That's why after the first year, it is essential to reassess whether it is a keeper card, or you should just close it and reconsider it later in life. Annual fees are often hidden expenses that people forget about and continue to pay without maximizing the card's full value. So I would recommend holding onto a credit card with an annual fee for multiple years only if that card brings you more value than the cost of the fee. Remember, with credit cards, it's all about playing smart, understanding the rules of the game, and making sure that you're always getting the best deal. So keep these points in mind, plan carefully, and get ready to ace the credit card game. If you want to hang out with me some more, check out these videos over here.